Hello and welcome to BQ Prime. You're joining us on this special interview show, Bankable, where we discuss what makes a banker tick, how the banker is looking at the economy, and whether there's something that they need to be worried about. Today, we have with us Mr. Prashant Kumar, the MD and CEO of Yes Bank. Now, of course, Yes Bank is a bank that has been written about a lot. I know I have written about it a lot myself, but there is always a tendency to look at Yes Bank with a lens of problematic past and maybe stabilizing present and potentially a bright future. But let's look at Yes Bank closely, and for that, Mr. Kumar, thank you so much for taking time out and talking to us. Let me first start with this problematic past question, because I promise you I won't come back to this, but just to set the context. Now, it's been 3 years since certain issues at Yes Bank were resolved. You came in, you managed the bank to stability. Now we are finally looking at a position where we are potentially looking at a high ranging growth in the future. I just wanted to take us through what these 3 years were like for you at Yes Bank.
Now, if I look back those 3 years, today we see a lot of I would be saying happy about the way we have progressed and lot of confidence. Because I think we adopted a strategy 3 years back in terms of moving more in terms of making the balance sheet very granular, both on loan and deposit side. Okay, so it was fundamentally moving towards the retailization. You really don't know the strategy which you are actually taking moving forward, whether would give you the desired results or not. I think if we see today, we feel confident, feel happy that the strategy which has been adopted is giving us the good results. Our retail advances is 45%. Large corporate has come down to 27%. Okay. But whenever you go into this journey of retailization, there is always an impact on the cost. And you are not able to protect your PPOP to assets.
Right.
Okay. But I think last 3 years, despite going very aggressively on the retail, where you have to invest a lot on technology, on the people, on terms of DSAs, our PPOP to assets have remained in the range of 0.9 to 1.
Right.
Okay. So it means there has been a lot of efficiency through which we were doing the retailization. That is one part. The second thing, like 3 years back, there was a very, very large NPA, almost 18%, I remember, GNPA ratio of 18%. And today we are talking of a 2.2% GNPA. The net NPA ratio, 31st March, less than 1, 0.8%. Okay. And even if we take into account the security receipt, carrying value of security receipt and NPA, together they are just 2.4%. So not only in last 3 years, we have been able to solve the problem on the asset quality. We have been able to go successfully in the retailization. We have been able to bring back the confidence of the retail customer.
Right.
So last year we have been able to open more than 30 lakh new CASA deposit account with us. The current run rate is that every month we are adding 1.3 lakh new CASA customers with us. Okay. If you see the past year, FY23, you must have seen because of the high rate of interest, everywhere the CASA ratio has come down by almost 200 basis points. During this difficult journey, our average CASA deposit growth is actually 26%. The average current account growth is 30%. That shows the confidence of our customers in dealing with us. So I think getting back the confidence of the customers, growing on both liability and the asset side, getting a market share improving, okay, solving the problem for the asset quality, strengthening the balance sheet.
Okay.
Today balance sheet has become very strong that I know like my credit cost because of the aging NPAs is just left to 80 basis point for the next year. So I think all these outcomes gives us a confidence that we are moving on the right direction. Okay. And this is the inflection point for us. where all our investment in technology, people, the processes would start giving us the results. Another, I think, the big achievement has been a recovery and the upgradation.
Mm.
Last 3 years, we have been able to either recover or upgrade 19,000 crores. Now, 19,000 crores recovery in 3 years during the difficult times of COVID and all those things is not something easy.
Yeah.
And this trend would continue in this current financial year also, which would take care of our the credit cost.
Mm.
Similarly, like if we see last financial year, we have set up the limits or disburse around 1 lakh crore of loans. So I think what we have done last year would be also giving us the credit growth in the current financial year, because some of the limits which have been set up, the customers are going
Correct.
to use that limits.
Correct.
So I think we have absolutely be on the right trajectory, okay, and we have reached to that inflection point where the whole bank, the institution, would start giving the desired, say, results to all our stakeholders.
Okay.
And during these 3 years, we have not lost our momentum on the digital.
Right.
We continue to be like supporting 1/3 of every digital transaction in the country through Yes Bank is Where. We are number 1 in UPI. We are number 1 in the Aadhaar enabled payment services. We are number 1 in the NFT. So everywhere, if you see on the digital side, we are on the forefront. So I think this is on what we are trying to build the bank to take care of the new digital India.
Okay. Tell me 3 lessons that you will take forward to whatever your next assignment is. But at Yes Bank, in these 3 years that you've managed the bank, what are the 3 key lessons? One for each year.
No, I would not be saying one for each year. But I think the first would be in terms of there should not be any concentration. Whether this is a concentration of risk, whether this is a concentration of power.
Okay.
This is a fundamental thing.
Got it.
So I think what we have done in terms of, instead of concentrating for the corporate, concentrating on a few customers, we have done the granularization on both asset and liability. Because liability is also very important. If you concentrate on very few large deposits, the risk of those deposits going out and you face a problem is there. So if you don't go with the concentration, if you diversify this is always good. Similarly, the concentration of power. Because if the decision making is lying with one person or few people, again you are not building the institution for the future. So I think this is also what we have done. There has been a decentralization of power. It is not with one person. And the moment you do it, then the whole sanity in terms of the credit decision is good.
Yeah.
Okay, that is one thing. Second is also in terms of, for running any bank, ultimately these are the people who run it. Okay, you invest in the HR. If you are all the time focusing only on numbers, you are not building the institution for future. So I think you need to invest in the HR, develop those HR, and the best thing for any institution can be where the institution would continue to run irrespective of an individual. I think this we are trying to do, this we have been able to do this part. The third thing I would be saying that the management should have a lot of patience just to meet the expectation of a few stakeholders. If you lose patience and make the mistakes, okay, then again there is a problem. Okay. So it means what I am saying, you need to have a patience in terms of not taking very, very high risk, continue to deliver in a sustainable manner. If you want to do anything in your tenure or a short-term thing, then again there is a problem.
Yeah.
So whatever you do should be sustainable. I think these are the 3 things which we have focused, and I would be saying with a lot of satisfaction that we have been able to improve or deliver on most of those things.
Okay. Let me come to this point of retailization that you mentioned of the portfolio and how complicated it is. If a lender does not have that kind of DNA. I'm just curious to understand, in a world where we have most of the system focusing on retail, right? Heavy competition. Now, previously when I've asked you this, you've always said that, oh, the pie is very large, people will grow. I get that. But there is a certain bankable population in the country. And most of the banks are focusing on that specific population because it's a stable group that gives you returns. How does retailization work in a highly competitive environment?
So first thing, like I would again like to bring to one part, size of the market. Today we have become the most populous country in the world.
Yeah.
Population is 1.42 billion.
Correct.
Right? The economic condition of the population is also continuously improving. So I think if we see few last years and going forward, I think our economy is doing very well as compared to any other economy in the world. Okay. So I think with the size of market, the way the economic conditions are improving in the country, I think there is a huge opportunity for all the banks. But there are two fundamental things. One would be that with the use of technology and with the lot of inputs now coming from various agencies like credit bureaus, GST, currently you are in a much better position to get the relevant data about the individuals. Okay. Now data is available to everyone. Issue is whether you have the capabilities to build up or prepare yourself to take care of those customers. So if you see the penetration of our population in a formal banking is still very low. It means again there is a huge opportunity. But the most important is you build the capabilities and then go for that particular product. So suppose the institution is not having the capabilities to take care of a particular asset class, maybe corporate, project finance, even unsecured. Okay. Unless you are able to have those capabilities on the technical side where you are able to get all the relevant data, take a right credit decision for underwriting that customer. You also have the capabilities for collection. Because the moment you go for retail customer, if you don't have the capabilities for collection and just thinking since everybody is going, you also do, you would be in the problem. So I think it is important for all the financial institutions to build up the capabilities for both credit underwriting and for collections, and then go into that product. But again, I would be saying you should not go overboard as compared to what is the part of your balance sheet. So deconcentration, or if you move away from the concentration, I think it is very important.
Okay. So in today's banking system, the way the system is structured at this point in time, there's a lot of focus on retail, of course, and a lot of the banking credit growth is coming from retail. 15.9% non-food credit growth I saw the last data, which is for the first fortnight of April. I'm curious to understand, where does this unsecured push fit into this narrative of let's be cautious, let's be careful about building? Because if you're growing at 30-40% on the unsecured side, not you, I'm talking about the system, then where is the caution?
No, so I would be saying basically, like when we talk of a unsecured, okay, unsecured is more in terms of whether you are having a tangible securities. I think we would slightly like to move from this. You need to have the certainty of the cash flows. Sometimes you go for a secured business loan. If you don't have the adequate cash flows, you may go into the delinquencies. And then recovering money out of monetization of those security is equal challenging task. So I think the issue is more in terms of taking care of the customers, giving credit, where you have a certainties on the cash flows. And I think that would be reflected in the credit bureau score. If it is a MSME unit, what kind of sales they are doing, what is the profitability which they file through the GST returns and other things. So I think the credit underwriting capability is more in terms of cash flows, which is important. But when I am talking about the caution, I think the issue is more in terms of doing a sensitivity analysis that whatever is the income, current income, how it is going to be impacted if there is a change in the macro environment. If rate of interest are going up, what is the capability of a person to service? So basically, it is not about static ratios. I think the sensitiveness in terms of if the income flows are impacted, if the overall economy, there are say headwinds, then those customers would be able to service you. I think this would be very, very important. And at the same time, this portfolio needs to be monitored. I am saying almost on real-time basis.
Yeah.
You can't wait like after 1 year I would be seeing if a customer is not able to repay. Once your loan become delinquent, you have nothing in your hand. I think this has to be monitored, how the quality is moving in terms of whether scores are coming down, and take the corrective actions immediately. So the caution is more in terms of using all your systems, a real-time monitoring, and a very strong collection.
Okay, fair enough. Let me touch the liabilities portion of the portfolio, because that is literally the flavor of the market at this point in time. Everybody's very concerned about whether the banking system is focused on liabilities. If you look at the way the regulator is managing the liquidity in the system at this point in time, every couple of months there is either a repo or a reverse repo, and I'm not entirely sure what is happening in the market. Are we flush with liquidity? Are we liquidity deficient? Because either direction that the Reserve Bank of India does any action, the participation of the banking system doesn't seem to be that strong. We saw 50,000 crore worth of reverse repo that happened last week, and there 20,000 crore got subscribed. What is happening in the system? Do we have enough liquidity at this stage that we don't need to worry about liabilities growth much?
So one would be whether the system has a liquidity. The second important question is whether liquidity is moving to everyone. So I think if we say like liquidity is there, and we take into account the surplus liquidity sitting with the few lenders, I think that is the issue. Because in the system we have the lenders where the CD ratio is 90%. Plus, we also have the lenders where the CD ratio is around 65-70%. Okay, so it means they are sitting with surplus liquidity. If you work out in terms of what is the current liquidity available into taking into account the surplus liquidity sitting with the few lenders, then yes, we have the surplus liquidity. But if you see in terms of getting the liquidity for everyone, I think this is something which is the challenge.
Right.
Okay, and that's why you have seen almost everybody has increased the rate of interest, and there is a huge, I would be saying, struggle to get the quality liquidity in the system. And I think this year also this would remain as a challenge for us.
What is quality liquidity to your mind?
I think the quality liquidity would be more in terms of if you are able to have more like saving accounts, the current account. So I am saying without increasing the rate of interest, if you are able to take care by giving a good customer service.
Okay.
There has been a lot of premium even today in terms of kind of service and the convenience which you give. And definitely there is a confidence and trust factor which always plays. Okay. If you are not that large, but still you can provide that convenience and the service. Okay. So I think without increasing the rates very aggressively, if you are able to grow on the liquidity side, I would be saying that is the quality liquidity.
Okay, fair enough. So now that is becoming a challenge, does that directly mean that the cost is going to just go up for the system in general?
Yeah. So I think last financial year cost has gone up, and some of the cost actually because of the repricing of deposit would also play in the current financial year. So I think one of the concern or the risk is that whatever rate of interest has gone up in the past, the real impact would start coming down this year.
How are you navigating that at Yes Bank?
So I think for us, we know like this is a challenge for us. Okay. So last year we have focused on the CASA deposits. Okay. Our CASA deposit end of period growth is 16%. Okay. But if you see the average CASA deposit growth for us has been 26%.
Okay.
And average current account growth has been 30%. So we are focusing on retail customer, trying to get more and more saving and the current accounts. Especially current account has been a very good growth story for us. Current account used to be 9% of our deposit 3 years back. Today they are 15%.
Oh.
Current account you can get only if you are able to provide the solutions. Solutions on technology, solutions for their problem. So I think our transaction banking and digital banking are doing a absolutely fantastic job.
Yeah.
And most of our current account flows are coming because of we are able to provide those solutions.
Okay. So, transaction banking, I just wanted to get your view about where the market is at this point in time in terms of your competitors and you, the space that you're operating in. Are the days of companies, because they have a long-term relationship with a bank, so they will just continue with that bank, is that completely done? Is everybody now looking for better opportunities?
Yeah. So basically two things. It is more of a transaction. If you are having a lending relation with someone, some time back, people were going for what is the best solution. But today, as per the current regulatory guidelines, if you are not part of at least 10% of the working capital limit, you are not allowed to open a current account. Okay, so this is one rider. If you are minimum 10% of their lending relationship, and you are good in offering your products and services, you are the preferred banker to take care of their transaction banking requirement. But you have to be there at least 10%.
Does that put up some pressure on your on the wholesale lending growth side? Because now you're like, okay, I need that relationship, so let's just go and lend.
No, so basically I would be saying that because of this, we are not able to fully use the potential which is available because of the solution.
Okay.
So even we have the best solution, the corporate is very happy to have this solution. But if we are not able to participate in on the lending side, then we can't offer that solution. That solution.
One peculiar comment that you made that caught my eye when the quarterly results were announced last week, you pointed out that you're not able to meet the requirement of some of your best rated corporates because the pricing expectation on their part is just not something that is viable for you. How does then a medium-sized lender survive in this market? Because then your larger guys who have a lower cost of funds will end up picking that customer up immediately.
So at the same time, I was also saying there is always a premium on the service. And for lender, especially the corporate customer who would like to have a loan, one of the factors is also a quick turnaround time. So I think the medium-sized players who would be good in terms of meeting the requirement of the customer fast, doing a quick turnaround of their request would still be part of it.
Okay.
But definitely pricing is a challenge, and wherever like there are large lenders who are able to offer a very competitive rate, it becomes commercially unviable for us to do it.
So is there as a banker, when you look at the system, is there some level of mispricing?
I would be saying. I would be saying there is a mispricing of the risk because of the surplus liquidity sitting with some of the lenders, because of also in terms of eagerness to grow the balance sheet. I think the risk is not properly being priced.
Okay. Okay. Fair enough. I also wanted to get a sense of what the regulator is sort of hinting at and telling you as a banker. Where the system is, because this 15.9% non-food credit growth that has come in, I'm just surprised by no change in commentary from the lending system. Everybody would be probably saying that, okay, so now we've reached a high base. Now probably you will temper the growth a little bit in the coming year. But nobody seems to be pointing to that at all. Everybody's so gung-ho about this 20-25% growth. How is the regulator seeing all of this? How are you seeing all of this?
No, so I would not make any comment on behalf of the regulator.
Sure.
But definitely what we are looking for, one of the deciding factors for this kind of loan growth would be your liability growth. Because if you don't have the liability, you can't grow. But suppose you have the required liability, I would be saying don't go with the market. You need to see what suits you commercially. That is one part. Where your institution is capable of doing the underwriting and collection. Okay. In the current times when there is a lot of uncertainties, you have to be little cautious. Don't go overboard. just because somebody is growing at 20% and you also grow 20%, I don't believe.
Yeah.
I am saying depending upon your own capabilities, you grow in a market which is very well diversified, gives you a good return also, okay, without taking a high risk. I think that would be our approach.
Okay. Okay. Let me come to the asset quality portion of the discussion here, because you're one of, I think, you are the first lender to have decided to do this portfolio cleanup, right? Sell it down to a third party, let them handle the recovery while you focus on growth and core businesses. What do you see in terms of the ability of the system? And when I say system, I'm not just talking about banks. You've got the courts, you've got ARCs. Yeah. The system's ability to recover money, is that something that is at this point in time a little premature, would you say? Or do you think that we have enough tools handy to ensure that the recovery of these bad loans is done at a good level?
I think there has been a lot of positive developments in the past. But still, I would be saying we are still far away from making the recoveries at the right time. Okay? Most of the time, the lenders would not go for the aggressive recoveries unless the account becomes non-performing.
Correct.
Asset, right? If a particular, say, account is sitting across different lenders, decision making is also something which becomes a critical challenge. So, if a individual bank would be doing recoveries in their own ways, there is no commonality of approach.
Yeah.
And that's why I think this ARC can play a very, very important part. Okay. I think the most important example would be the national ARC. Okay. Now, a national ARC is trying to aggregate the loans from the different lenders.
Yeah.
Then the decision, but the issue is like if you see currently, the loans which are getting transferred to national ARC, you see the aging. These accounts have become NPA long back. Okay. So, if I am not talking of only national ARC, for any ARC, if you are trying to recover when a loan has remained in the NPA category for 6-7 years, the quality of assets would deteriorate.
Correct.
And the possibilities of the recoveries would also become very, very difficult. Okay. So, I think we need to move very fast in terms of taking a decision to recover. That is important issue. And wherever there is more than one lender, I think it is important either to have an absolutely common approach, or maybe an institution like a ARC
that will
gets aggregation of all these loans and take a call.
Correct.
Issue is more in terms of decision making happening at a very, very fast speed. So, if a loan becomes NPA and if we are able to start either the recoveries or maybe in terms of making it viable within 6 months, then still there is a lot of value sitting in the assets. If you take those decisions after 3-4 years, I think we lose the value.
Do you think that historically now ARCs have become sort of a warehousing tool because it's easier to park it there rather than you pay a little bit of a management fee, it remains there, it's off your book, then you...
No, I think it is not.
The headache is gone.
It was something which was there in the past. Today, as per the regulatory guidelines, even if it is sitting in an ARC, okay, as long as you are holding a security receipt, the provisioning requirement on the security receipt would be equivalent to like it was there in your books. You don't get a arbitrage.
Having said that, you're selling assets that have been heavily provisioned already on your book, right? So, which means that you're probably selling it at a 10%, 20% of the actual value of the loan. It doesn't hit you that much, right? Even if you have to provide for it, it doesn't really hit you that badly.
No, that's okay. I am only saying, first you need to have that expertise within the bank for recoveries. And then you also need to be ready to spend so much time on this. Okay? If you know what is the recoverability of this loan, there is a ARC which can give you a right price. It would be better like if they do it. Okay? You would be having your time more for the business development. Okay? There is another factor which is also very critical. Today the PSL requirements are calculated on the basis of the gross exposure. Okay? So, irrespective of the provisioning which you are having, if you are transferring the large gross NPS to ARC, your PSL requirement, which is a huge drag on your profitability, would also be taken care of.
Okay. Good that you brought up this PSL thing because one lender in the system at this point in time has gotten some, because they're going for a large merger, so they've gotten some dispensation from the regulator on PSL. But this argument of should PSL just be calculated on your retail credit and not your wholesale portion of the book as well gets counted in the 40% A and B C that people talk about. Do you agree with this argument that you look at what is the most relevant benchmark, right? You look at your retail book and then 40% of that as PSL, that would make a lot more sense. Do you agree with this?
I think we should not see this issue from a lender perspective. Okay? If you see from lender perspective, then somebody would be saying why there should be a requirement of a PSL. I think when these guidelines came, it was more from a national perspective, that every lender should participate also in terms of taking care of everybody, especially the people who are not able to get the financial support.
Yeah.
So if your objective is to see like the entire banking system participate, and if you decide not to participate because of any reason, then you need to invest in certain RIDF funds. Okay? If you start seeing only from the profitability of an individual bank, then I would be saying there should not be any requirement of a PSL. This is left to me what I want to do.
Correct.
But I think the banking sector, when you are getting the liquidity from everybody in the market, you don't make a distinction. When the banking sector is also responsible, because that is a sustainable means. I see in a different way. If you don't take care of the nation, whatever you are doing is not sustainable.
Correct.
And at least personally, I believe you should not be part of that part where you are only concerned about the institution or self. I think we need to be very, very cognizant about the nation building. So if you see from this lens, maybe some tweaks may be required in view of the current structures. But fundamentally, the banks have to be responsible.
Okay. Talking about distribution in general, now for a period of time, everybody was focused so much on digital and technology and transformation. There was this statement: branches are done for. We don't no longer need a bank branch because a bank can be on someone's phone and things get done. Now, the last 2 years, this commentary about expanding branch network, at least from the larger lenders, has suddenly picked up again. Everybody's investing on building a branch. Maybe the branch looks different than what it looked like 10 years ago, but still, it's an investment on a hard asset. How do you see distribution, considering that you also invest considerable amount of money on tech?
No, I think the physical presence is something which is very important. Okay? Some of those kind of thought processes started happening when the concept of a pure digital bank started happening in the Western geographies. Okay? But there also it has not been successful. Fundamentally, from a human mindset, if you want to put your money somewhere, you would like to be assured of at least seeing the bank. Okay? If it is only a wallet, that confidence never comes. So I think we have seen as a human mindset, especially I would be saying from Indian context, having a physical presence is something which is very, very important. The only thing is what you are rightly saying, the form of the branches has changed. If earlier it was a 3,000 square feet branch where 10 people are sitting, today you can have a 800 square feet branch with digital support system, hardly 2 people sitting there who can support the customers who are not fully aware. But I think across the banking industry, most of the transactions are happening on the digital pieces. People are not coming, and that kind of pressure we are not seeing. But I think having a touch point in geographies is very, very important. So I think this branch expansion and reaching out to everywhere would continue to happen in a different form, where the cost of establishing a branch would significantly come down and is actually coming down.
I want to pick your brain a little bit about what is exciting in the economy at this point in time for you as a banker. When you're looking at the market and when you're looking at the way things are evolving, what seems to be the one bit that you're like, okay, so this is working and I want to be in this and I want to grow here?
So if you see last, say, almost 10 years, okay, our fundamental issue was that everybody was not exposed to the formal financial system. I think with a lot of initiative from the government of India, Today, every Indian has been able to open a banking account
Sure.
on the liability side in form of a Jan Dhan account, right? So this has been a fundamental change. The second fundamental change has been made on the digital side with the availability of mobile, okay, with the availability of Aadhaar, people are able to do UPI. If you want to transfer money, do a transaction, there is no need to go to a bank. Sitting in your home, anywhere with the use of mobile, you can transfer. So fundamentally, two things have already been taken. Opening a liability account,
Yeah.
doing a transaction. I think one big piece which is missing, what has been done as a Jan Dhan account, if the similar thing can be done for credit onboarding,
Okay.
where every Indian is being part of the formal banking system. And that is, I think, a huge opportunity, where we are still far away from the opportunities which are available in the country. So I think this is something not only for Yes Bank, I think for the entire banking sector, this is one space which has to be taken care the way it has been taken care for Jan Dhan and for the mobility.
Okay. ONDC and account aggregators and all these, I mean, there are steps in that direction, but are they growing as
No, I
you
think
like?
they are the steps in that direction, but I think it will take some time. And I am also not expecting banking sector to take care of this issue in a year or two.
Yeah.
But I think this is, at least I think, is a area for opportunity. Anybody who is able to move fast in this would be getting the advantage.
Okay, fair enough. Talking about the government and its role in this system, right? How do you see that panning out? Because at some point in time, as you said, the organizations have to think about the fact that you are participating in nation building, right? Especially banks. They're a key participant in all of this. So, how long do you think this trend of the government telling you what to do? I'm not talking about Yes Bank here, but I'm talking about the system. The government is saying, okay, listen, we need to build more branches in the Northeast. Then you will see a bunch of banks making an announcement that I'm going to go and open a branch in the Northeast. How long do you think this administered sort of activism will come?
No, I would not be saying administered. I am saying if we don't discharge our responsibilities, then we need someone to nudge us. Okay? So it is not administered or a direction. I would be saying somebody reminding you about your responsibilities is important. Because as a human being and as a part of the commercial institution, most of the time the focus is the profitability. Okay? And if we want to play a larger role in nation building, which would be sustainable for both nation as well as for you, you can't expect to develop your institution in an environment which is economically not doing better.
Yeah.
Today, why every bank is so gung-ho about the opportunities?
Yeah.
Because we as a nations are going up.
Correct.
As a nation, if we are going like some of the other communities, no bank would be like to grow this. So I am saying it is important for everyone to understand that nation building is not an additional responsibility. By nation building, you would continue to be part of that journey for the economic development for you and for others.
Okay, fair enough. I want to pick the last question on this because this is something that has bothered me about banks and NBFCs, the way they're growing. Is this push to call people and harass them till they take a loan from the institutions? This is something that everybody either makes fun of or is really frustrated by. When you're talking about distribution and when you're talking about tech and tech enabling better distribution, right? Is there no way to avoid this kind of push, this third party push on taking loans?
No, I agree with you completely. I think this can be very, very, say, disturbing for the people. Okay, and I think today we have not been able to use the artificial intelligence for this. Otherwise, today, like if you see calling a person, where the person is already having some kind of loans which are available to credit bureau, and still if everybody is calling this person, doesn't make sense. If I can call a person for something which he is not having, it would be of interest to them.
Yeah.
So I think we are not able to use the right technology, the artificial intelligence and machine learning, but I would completely agree with you. This can be of very, say
High nuisance
huge
value.
problem. Yeah, huge problem for everybody, and we need to. I think as a banking sector, making a call, but making a informed call
Yeah, exactly.
makes sense, which is going to be of interest also.
Yeah.
So I think absolutely this is something which has to be solved.
Yeah. All right. Thank you so much, Mr. Kumar, for joining us on this
Thank you
conversation.
so much. Thank you.